Perreault from RE/MAX here with your weekly home update for the Portland metropolitan area with data for the week ending April 14th. Mortgage rates have been wildly fluctuating in recent weeks. Does that mean Portland's sales prices will be bouncing back or falling? Join me as we unpack the most recent statistics and trends to reveal the pulse of our local real estate market. So we had another strong week in terms of average sales price for that week ending April 14th. It ended up being higher than the previous week's already strong number, and the average increased by 4.3% over the same period last year. Not too bad, but keep in mind this figure represents what was happening in our market 3 to 6 weeks ago when buyers and sellers first agreed upon these purchase contracts and mortgage rates were a little lower. Over the next few weeks, we should begin to see the effects of these rising interest rates, including some downward pressure on sales prices and on demand. Looking at demand, the number of purchase agreements signed by buyers and sellers increased by about 18% from the previous week's low number. It appears and feels like a reasonable number for this time of year. However, we ended up with fewer new purchase agreements than last year at this time. Only about 50 deals, but this is significant because it's the first time this has happened in about 3 months. This is another spot where we might start to see more downward pressure from higher mortgage rates. We may be witnessing a troubling trend in supply numbers. The number of new homes on the for sale market this week decreased slightly from the previous week's high, but much less than was anticipated. We're definitely seeing more homes hit the market than we were seeing last year at this time. In fact, buyers now have nearly 40% more homes to choose from than last year. But keep in mind that our market sample is for the entire Portland metro area, and there are areas, neighborhoods, and market segments that are performing significantly better than average, as well as those that are struggling. Some neighborhoods, there's nothing left to buy. So if you have any questions about your specific area, please contact me. The average number of days a home spent on the market before receiving an acceptable offer was 43, which is only a few days more than last year at this time. The median days on the market was 12, indicating that half of the homes sold in 12 days or less, while the other half sold in 12 days or more. Could be significantly more. That number was one higher than the previous years. To sell their home successfully, sellers had to discount their original asking price by approximately 1.7% on average. A few months ago, we were seeing 3.5. There are 2 more areas that were most likely to experience downward pressure as interest rates rise. Speaking of interest rates, I mentioned that it has been a difficult couple of weeks. Over the last 3 weeks, we have seen stronger than expected reports on jobs, production, and consumer spending, resulting in higher than expected inflation reports. Fed board members have been talking about keeping rates higher for longer, and it looks like the expected June rate cut is now off the table. The best rate I could find for the 30-year fixed mortgage was 6.875%, with most lenders well into the mid-sevens, if not more. The yield on the 10-year Treasury, which is one of our best indicators of where mortgage rates are headed, hit the highest numbers we've seen since November of last year, when most lenders were at that 7.5% mark and probably a bit more than that. Well, we crossed the finish line for this week's market roundup. Whether you're in the market to buy, sell, or just feed your market curiosity, please be sure to follow me or subscribe to this newsletter and arm yourself with prime real estate knowledge. We want to keep you ahead of the curve. I'll catch you at the same time and place next week where the latest stats and trends await.